What's going on, guys? I hope you're doing well. I hope that this whole market correction hasn't been too bad on you guys. But welcome back to my channel. Today I'm going to talk about my latest moves and everything I'm thinking about right now because the market is continuing to act very, very volatile and very nasty. So just to give an update on what I've been doing, every single video I've made over the last maybe 2 or 3 weeks, I've said the exact same thing, and I'm going to say it one more time. I am still 100% cash in Robinhood. Um, I just don't see the need to have to get in right now if I feel like the market's going to go a lot lower than where it is right now. And based on this whole correction, my goal is I'm sorry, let me adjust my mic. Sorry. My goal is capital preservation. So I'm not shorting the market right now. I'm not buying into stocks, but I want to retain as much capital right before the market bottoms or where I think it's close to the bottom. And when we get to that point, I'm going to deploy all my cash into the stocks. I basically just want to have a lot of cash ready to strike. So, I do understand people that are buying into stocks, especially if it's long term. Like, I guess that's fine. But for me, like it's a lot more than that. Like I want to destroy the market. This isn't a hobby to me. This isn't a game to me. This isn't a part-time job to me. Like I really want to destroy the market and I want to get the best possible, bang for my buck. So yeah, I'm going to play very aggressively and I'm not in stocks yet. But let's go ahead and talk about what's going on lately. And basically when I will buy stocks. So first and foremost, these are the S&P 500 futures. If you guys aren't aware, a lot of tech stocks reported earnings today and this week. If we take a look at some of them, a lot of them got hit pretty hard after hours, including Amazon. I'm pretty sure Google might have gotten hit hard too. Yeah, so 3.7% for Google and 7% down for Amazon. I'm really not sure about the rest. But that explains why there's such a large amount of upper wick here on the daily chart for the S&P 500. But overall, let's just do a quick recap of what's been going on over the last couple weeks. So since my last updates, we've been just we haven't been doing anything but either going down or doing some counter trend rallies. The rally that we had today, I definitely wasn't buying it, and I just didn't feel like it was a true bottom. If we look at NASDAQ futures, actually, we got rejected exactly at the 200-day moving average on the NASDAQ. That's where the upper wick stops. And this candlestick looks really nasty. This is a lot of shorting and a lot of selling going on here. So when I see something like this, it's almost as if like you threw someone in a house, you lock the door and you set it on fire, and that person's like screaming, trying to get out, and you just, you hold the door down. That's exactly what this looks like. We broke below the 200-day moving average. We tried to get above it and we got rejected. And so now we're heading lower. If we break this low, I think things could definitely escalate. Any sort of rally that goes on right now, it'd have to be really constructive in order for me to feel like that's a meaningful rally. And even if we do rally above the 200-day moving average, maybe the 50-day moving average, I'm still going to be very skeptical. So, and the reason for that is just like, I just feel like too much technical damage has been done. So let's go ahead and zoom out a little bit. Let's talk about some of the long-term supports that I'm looking at. So number one, the 100-week moving average, both exponential and simple, doesn't really make a difference. So this is one support level that I'm looking at right now. This is also psychological 2600 support, as well as everything else that happened here at 2600, I think is really, really crucial. So this is the next point that I think I would probably buy stocks when we get here. Or I should say if we get here. I can't predict the future. But if or when we get here, I feel like this will be the first place to start buying. Now, if we take a look at an even longer term time frame, when this blue line was broken, then this magenta line certainly acted as support. So this would probably be the next level in which I would buy stocks. But of course, this is a huge difference from point A to point B. So when I do buy here, I'm going to have a very tight stop, and I'm probably going to be looking to sell stocks because I feel like when we do bottom here, or if we do bottom here, it won't just be a clean ride up. So I'm going to look to deploy some cash here. We'll see, maybe make a quick profit. I really want to see how the rally looks. And depending on whether it's a very impulsive rally or whether it's just very choppy and not really doing much, I'll make up my mind then. But for sure, this is my first buying point, and I probably won't buy stocks until we get below this, or at least at this. So that's my first level of support. And then obviously, I also hinted at it. This magenta line, which is the 200-week moving average, is the next level of support. It acted as very strong support here in the summer of 2015 all the way up to the start of 2016. And pretty much we're in a bull market if both of these lines are trending upwards and if blue is above magenta. So here, very clear case for a bear market. Here, very clear case for a bear market. It's definitely somewhat of a lagging indicator, meaning it doesn't cross bearishly right before a bear market. But for the most part, it's definitely some kind of confirmation, and I don't think we're going to get a bearish cross. I really hope we don't, because I'm not looking forward to recessions. I think they can, wipe out a lot of retirement funds and wipe out a lot of pensions, and I think recessions are very ugly. So I'm not hoping for a recession, but some kind of deep correction would be very nice. So let's go ahead and take a look at Amazon. Wow, are you guys seeing what I'm seeing? So what I see is a lot of gap to fill. So at its peak, Amazon was about 37 to 38% above this blue line, which is the 100-week moving average. And note that the last time that Amazon touched this line was here at the start of 2016. So it's over 2 years, almost 3 years since we've done that. How overbought was Amazon here? Amazon was about 37% overbought here, and we came back and we retested this cyan line or blue line. So yes, I do think we're going to get something similar. I do think Amazon has a lot of potential to just spiral out of control and let the floodgates open. So yeah, I don't think this is an incredible buying opportunity. I think this is an incredible buying opportunity. And I think this is an incredible buying opportunity. So let's see how deep we can get. In instances in which we lost this cyan line, we eventually hit this magenta line. So I think that will continue to hold true. Let's go ahead and take a look at how high above these lines we were here in 2013. Obviously not very bad, 31%, but we were still about maybe 47% above the magenta line. So that leaves both options open. But either way, that's where I'll be a buyer. Let's go ahead and take a look at something like Netflix. Netflix, again, we're pretty high above the 100-week moving average, and this was about a few months ago. So we were about maybe 47% above this cyan line. And yeah, I definitely think we're going to come back and retest it. Amazon at around $250 would be a great buying opportunity. Let's go back and look at the times that we were extremely overbought or extremely high above these moving averages. So here in the summer of 2015, we were about maybe 49% above this cyan line, and we came back and we retested it a few months later. These kind of patterns look pretty similar. So we basically hit a top, we made another weak rally, and then we came back and we crashed. We hit a top, we had another weak rally, and then we came back and we crashed. It's the same thing for Facebook, except Facebook looks a lot worse, and I've been bashing Facebook for a long time just because from a technical perspective it looks pretty bad, and it still does. But obviously it's a lot closer to its 200-week moving average, so I think this would be an ideal place to start buying at around 132, 135. So I may or may not open up a small position in Facebook. We'll see how the rest of the market's doing. One thing that's really crazy is Apple. And Apple looks absolutely amazing and just very, very strong. I'm surprised it hasn't taken that much of a hit. This consolidation looks actually pretty normal and healthy. And if the stock market wasn't getting hit so hard, I would think that we would just take off from here. But I think it's going to be a lot more confusing and choppy going forward. But either way, Apple would probably be a really safe bet if you guys wanted to preserve your capital. But anyway, so that's my update. I just went through some of the larger tech stocks, which I think are going to lead the way in terms of decline. And yeah, overall, I feel like, you don't get extra points for holding through bad periods. So why do that, I'm gonna definitely give you guys updates if I feel like the market's next to a bottom. I'm gonna give you guys updates on what I buy, when I buy it, and everything. So definitely subscribe if you guys are interested in more of this type of content. And I hope you have a great day. Good luck trading.